Good afternoon, guys. It's Working, bringing you a quick update on EOS. We're going to be looking at actually EOS and Ethereum. Hope you guys are having a wonderful afternoon. We're looking at starting off with EOS to the US dollar one-day chart on Bitfinex, guys. And I haven't updated you guys on EOS in a while. Basically, it's because EOS has been following Bitcoin. That still is the case. But I figured it's been about a week since I've updated you on EOS, guys, or Ethereum, and I just want to give you a quick one up on that, just in case we do get any kind of divergence between Bitcoin and EOS. What we're watching basically is we're watching EOS break out of this larger triangle that has been in this larger wedge, I should say, that price has been consolidating in. It's getting squeezed tighter and tighter, series of lower highs, higher lows, coming up to the apex, guys. And of course, anytime you reach the apex, if you watched me for any period of time, what do you expect? You expect a major move up or down. Now, we didn't have any kind of a catalyst, obviously, to push price up. I told you if you've been watching my Bitcoin updates that we basically run out of guppies to push price up, and of course, without any type of a catalyst, price just ends up falling down, and that's exactly what we've seen here. Price did fall down. I told you guys if we did end up breaking down out of this, now we had this little microstructure here, so of course we were expecting a breakout either up or down in the next day or two, and of course it just happened to happen today. But yes, price did end up breaking down, guys. I told you guys it did break down on the last update that the area we were going to be watching was right in here, at least on a microstructure level. This was the area we were going to be watching for price to initially come down and hit. Now, if it was going to be a very small bear trap, this would be the area we would be looking for reversal. We haven't had any kind of a strong bounce off of that yet, guys, which is a rather bearish sign. We'll wait and see how this ends up playing out. If this doesn't hold, let me zoom in here so you can see a little bit better. If we do end up breaking below this prior wick here, this prior low, that would mean that we did for the first time finally create a lower low. In other words, that could signal the start of a trend, even though that would not be a trend. That could signal, and I want to emphasize could, not will, but could signal the start of a trend heading down. A downtrend. Now, I'm not saying that's going to happen, guys. I'm just going to say we're going to be watching price very, very closely and see if that does end up happening. What could happen? So this is more on a microstructure level. This is the area I'm watching for a reversal. See if price comes down, hits this area, and comes shooting right back up. Now, usually when we're getting a bear trap, what that means is they want to fool people and they want to fool retail investors into taking out a short position and having shorts end up just stack, and of course that way they can reverse price and bring price right back up. Shorts start stacking. This is a zero-sum game. If everybody's going short thinking price is going to fall down, what do market makers do? They bring price right back up and take their money. That's how they make more money, right? Zero. Remember, this is a zero-sum game. For somebody to make money, somebody has to lose money, and that's how they end up doing it. Now, right now, if I look over here at our short positions, let me check EOS. Here are the EOS shorts. Shorts are actually falling off the board. You would expect them to start to rise like we are in Bitcoin. Bitcoin shorts are actually rising. Come over here and check them out. Bitcoin shorts have actually started to uptick just a little bit. This is on the daily, so it doesn't look, let me switch over to the 4-hour. You can see a little bit better. Yeah, Bitcoin's shorts are starting to rise. We come over here, we check EOS. EOS shorts are still dropping. Now, we had this little rise here, and then they're just falling right back off the board. Excuse me. So that means retail investors, and we come over here and we look at longs. Longs are dropping as well, which is extremely, extremely interesting. If longs had been stacking, then of course I think price would have been dropping much, much further. But longs are actually dropping as well, which means people are just losing interest. People are just basically done with all of this, and it'll be very interesting to see how that ends up playing out, guys. What could happen? A few things. We could end up seeing much, much lower lows. Price and this thing just fall over, because if nobody's entering short, nobody's entering longs, volume is drying up, which it seems to be and has been for a while. This thing is just going to fall right over. There's going to be nobody left to prop it up. Market makers aren't going to be able to push price up, push price down. There's no one to make money off of it, and this thing just ends up falling right over. However, if price does end up falling down, if we end up breaking through this low, that's going to be one of two things. Either this thing is just going to fall over, as I said, or it's going to create a buying opportunity, and we're going to have to wait and see what retail does with that. But I do believe if we do break this low down here, I do believe there are some buy orders that are sitting right down here between 4.73, 4.67. It's an extremely relevant zone, guys. If we look back here, we can see that we've fallen down into this zone and we've wicked through it a few times, but the body of these candles have not broken this zone with a body on the daily since August 20th. It's broken down into this zone, wick, 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 came right back up, broke back down, wick, wick, right back up, back down, big wick, and then a nice explosion right back up. So let's see if that ends up holding again. This support area between 4.73, 4.67, guys, that could be the area that we're going to be looking for. And on more of a larger level, if I look at this entire structure, guys, this is the area, big picture-wise, looking at this big picture, this big wedge, this is the area I'd be looking for a reversal if this is, in fact, a bear trap. Now, for a bear trap, you actually have to trap bears. So what do I mean by that? I mean, we need to see, let me go back here to shorts. We need to see EOS, there we go. We need to see this EOS shorts chart start to stack. And if that does happen, if shorts start to stack up in a straight line and longs start to fall off, at that point I'm going to be watching out for a bear trap. And I do expect, if this does break down, if we do break below this this microstructure right down here, or this 4.96 support, if we do break below that, I think it's very, very likely we're going to at least come down here and test this. And at that point, we'll see whether or not this would be a bear trap. Excuse me, a bear trap. Price comes down, hits this zone, we get a nice explosion right back up. If that does end up breaking down, guys, of course, as I told you many times in the past, then of course we've got a little bit of support at 450, a little bit at 428. I do not expect, if we crash through 467, I would not expect these areas to hold. I would be very, very hesitant to place any buy orders in here at all. I would place some buy orders here, but if that does break, I'd have my stop loss at about 460, and that's the area that maybe 450, maybe no lower than that. That's where I'd be getting out. And if 450 does break, I do think there's a very high probability we're coming down to the $4 to $3.50 range. And as I've showed you guys many times in the past, we wicked down into that $4 $3.50 range all the way back here in December, and it created a very strong supply zone down, or excuse me, demand zone down here. In other words, for those that don't know what that means, that just means there's more than likely a ton of buy orders that are sitting down here between $4 and $3.50. And as I told you guys in the past, this is where, always have fiat on the side so you can take advantage of prices if they do come down this low. This is the area I would expect a lot of people to scoop up EOS if it ever does get here. I'm not saying it's going to. I'm just saying if it ever does get here, this is the area I would expect an absolute reversal. This is where I'd be looking for a bottom, and this is where I have my buy orders stacked if it ever gets here. I've got fiat on the side with buy orders stacked, ready to go right here if we ever get there, and I have ever since price came down to this low. As you guys know, as I've told you guys, if you've been following my EOS updates, these are where most of my buy orders are stacked for EOS. Now I obviously have a ton of EOS in long-term hold that I'm not going to sell, but most of my fiat is sitting in fiat. Most of my money, I should say, my portfolio is sitting in fiat, waiting for lower prices. If it never gets there, so be it. If we establish an uptrend and I don't catch the bottom, I'm fine with that. I've already got my long-term positions with about 30 to 40% of my, or excuse me, about 20 to 30% of my my portfolio in long positions. I'm holding those, and the rest in fiat, I'm waiting for a clear trend unless we get down here to the $4 range, which I will deploy a ton of fiat. So that's kind of the areas that I'm watching, guys. So what we're going to be looking for, we're going to see if this area can hold right here, sitting at about the lowest, which would be about 496. Really, though, this wick down here at about 498, $5, somewhere thereabouts, guys. $5 is a good psychological. We'll see if that holds. If that does break, I think it'll be a quick drop down here to at least 473 to 467, and at that point, that's what we're going to be watching for, that reversal. And if that does break, guys, watch out below, in my opinion. To the upside, guys, if we do break above 545 and start consolidating above 545, I think that'd be an extremely bullish sign, And at that point, guys, I may start to reevaluate this TA. Of course, we need to break up above and get above this zone here between 4.92 and 6.06. I'm not even going to discuss that as of right now, guys, because we do have this bearish break. If we do break above 545, at that point I'll send out a new analysis here. But for right now, guys, we're just going to be watching this $5 range. See if that does break, $5 to 496. See if that breaks, and if that does, we're going to be watching this area right down here. Coming over here and checking out Ethereum, guys. Ethereum broke down out of these couple different wedges here, broke down out of this latest one and has been consolidating here for about, let's see, since October the 12th, somewhere thereabouts. So just, what is that? Just over 2 weeks, somewhere there about 2.5 weeks. We've just been consolidating right on top of this zone, guys. This between 196 and 178, this is the area I told you guys many times in the past that this was a good accumulation zone. I told you guys when price was up here and falling down here, I told you this was the area to accumulate. And if we look at this area, this is the kind of reversal candle I want to see. This is again on the daily. We're looking at Ethereum to US dollar one-day chart on Coinbase. If I didn't tell you that, guys, sorry. I want to see a reversal candle like this. This is a textbook reversal. Price ends up coming down. We get this very long wick here with this little excuse me, guys. Let me get a drink of water here real quick. Sorry about that, guys. My throat gets pretty dry there sometimes. I had to get a quick drink of water. So yes, what we're watching for here is we're watching for this a very strong reversal candle. I want to see, this is the area to accumulate between 196 and 173, guys. I'm going to be watching this zone right here. This is the area. If it does end up breaking down, guys, we could come down to much lower lows. However, I wouldn't. I would still consider possibly having some fiat, deploying some fiat in this area. So I'd be looking at possibly entering a small position between 189 and 194, somewhere in there, guys. And I would absolutely be looking at entering a small position even below that. So I would actually stack buy orders between 188 all the way down to about 178 if you're looking to enter into a position on Ethereum, if that's the case. But I would, knowing that if we do end up breaking below this 177 zone, I would even allow for a wick here. So call it about 175, somewhere thereabouts. If we do break below that, I'd have a very tight stop loss because more than likely we're coming down to this 159 to 155 area right down here. And this is what I'm looking for, guys. I want to see if we do end up breaking below this zone, or if we end up breaking below this microstructure right here. So if we do break 184, I want to see something like this. As I was telling you guys, this is called a hanging man. This is basically when price ends up coming down, we get a very strong wick. The bulls push it right back up. It doesn't sit down here. It doesn't consolidate. Bulls push it right back up, and then we have follow through the next day. The nice bullish engulfing candle. This could be, but could not be more of a textbook reversal pattern, a candlestick pattern, as we saw right back here on what was that, September the 12th. So that's the kind of candle I'd like to see. I'd like to see price come back down, have that very strong reversal candle, and then get a nice follow through as we had back on September the 12th, somewhere thereabouts, guys. But yeah, this is the area I would consider possibly a small amount of my fiat, but I would have fiat on the side again, knowing that if Bitcoin breaks down, Ethereum is going to break down along with it. And the area that I'm going to be watching for a possible reversal, as we saw back in here, is 159 to 155. We can see that that's been tested numerous times. Now, yes, it's broken through by a wick, was always pushed up right away. We saw it right here, came back down. Body of the candle didn't break it. We had this wick, but the body didn't break it. Got pushed right back up, came back down. Body didn't even make it down here, came back down. Body didn't even make, or body got pushed down here to about 155, very long wick, but didn't break this area. This is the area I'd be watching for a reversal, 159, 155. But again, I have a pretty tight stop loss in this area, guys, knowing that if 155 does end up breaking, if you look back here, there's really no support between 155 and $91. Really no support at all. So this thing could just follow breaking. Now $100, that $100 is a very good psychological support. And we can see it's a little bit of support right here. If we look at it right here, so somewhere around $100. Let's just call it $100 down to $91, somewhere thereabouts, guys, would be a decent psychological support. But again, anywhere, if 155 does end up breaking down by anything more than a wick, guys, I think we're very quickly going to drop to at least $100, but very, very likely come down into this supply zone down here between $91 and $77. And this is the area that I would definitely have fiat on the side to be able to take advantage of that if and when Ethereum ever comes that low. And again, I'm not saying that it ever is going to. I'm just saying you want to always be prepared. Checking the RSI on Ethereum. This is again on the daily. We need to see the RSI decisively break above 50. We haven't broken above 50 decisively since the last time we were really above it. Again, decisively was May the 20th. Now we've broken above it briefly here, came back up, and then just immediately broke right back down. Broke it here briefly, came right back down. Broke it here briefly, came right back down. But we haven't had really any consolidation above 50 RSI since again, yeah, since May the 16th. So we really a good indication that we have seen a reversal, that the bulls are possibly coming back. It would be a break above a 50 RSI and then consolidating above that. So on the daily, again, on the daily, that's what I'm going to be watching for, guys. We come over here and we look at the 4 hour. The 4 hour is way oversold, guys. But again, if we look in the past, we could see that the 4 hour, even though it's been oversold here, usually what it does is it ends up coming back up and then coming back down for at least one retest like we saw here. But again, in the past, guys, it's done multiple retests many times. So just because the RSI is extremely oversold here on the 4 hour does not mean that price can't go lower. And if we come over here and we look at the daily, guys, we can certainly see that we definitely have a little more room to drop. The daily is only sitting at about 36, and we can see that the daily RSI many times has come down much lower than that. As recently as let's see, all the way back in August, it was sitting at about 18.6, 20 back here. So yeah, the RSI, we definitely have room to drop. Doesn't mean that's going to, just means that it is there, and you need to be prepared for that, and you need to be positioned for that just in case that does end up happening. So to the upside, guys, what we're going to be watching, we need to get back out of this zone. We need to strong reversal candle like this, get back out up on top of this zone, consolidating on top of this zone, and then I want to see another run up here to the 220 to 238 area. If we can break above 238 and start consolidating above this 238 zone, guys, I'm going to start to get extremely bullish. If we can even start getting back into this zone, if we can break into this zone and even consolidate within this 220 to 238 zone, guys, that's going to even be extremely bullish, guys. I just want to see us get out of this 196 to 178 area. Now, again, might be a good place to start deploying a little bit of capital, but I would be very careful knowing that if Bitcoin does break down, guys, Ethereum is going to break down, but more than likely at a much greater degree. So just be very, very, very careful, guys. What really, if you want to be, if you want to be conservative and you're not comfortable with this, just have your fiat on the side and wait for an established trend. It's going to come. You know, this new trend is going to come. We might see lower lows, and again, I want to emphasize might. I'm not saying we're going to. We might see much, much lower lows, but once we do bottom out, once price gets low enough that people start investing again and new money starts flowing back into this market and volume comes back into this market, this thing is going to explode to all-time highs. It's going to dwarf what we saw in 2017, in my opinion. Not financial advice. So just wait for the uptrend. If you've got fiat on the side and if you're uncomfortable and you have that knot in your stomach feeling about this, don't do it. Wait for that uptrend to get established. Once that trend is established, there's going to be, you might not catch the bottom, but there's going to be so much opportunity, guys, up ahead. So much more opportunity up ahead. So just do not sweat it. Whatever you do, if you don't have fiat on the side, if you end up losing your money, you're not going to be able to capitalize on what is, in my opinion, going to be an extraordinary bull run here in the next, at least the next 6 months, possibly, you know, 6 to 9 months. I think we're going to be on a bull run that is going to dwarf 2017. So just keep that in mind, guys. I'm going to go ahead and wrap it there. If you have any comments, questions, suggestions, please let me know in the comment section below. As always, I would appreciate an upvote if you have enjoyed this content. Until next time, guys, please trade safe. Take care of yourselves. This is Working. Signing out.